Hello to all of our attendees. Thank you for joining today's Family Office Network's webinar series, Art, Value, and Momentum in a $1 Trillion Industry. Before we get started, I would like to take a minute to introduce our speaker today, Paul Hollingworth. Paul has over 30 years of experience working in Latin America. He speaks fluent Spanish and Portuguese and received both his undergraduate and a Master's of Art in Hispanic Studies from Glasgow University in 1990, where he specialized in languages and Latin American art culture. Paul then received an investment management certificate from the Society of Certified Financial Advisors, headquartered in the UK. Paul will be presenting on the Latin American art opportunities. The fund focus is mainly on established liquid artists with a proven auction history, as well as active emerging painters with more limited but tangible auction history. At the end of today's presentation, we will have time for Q&A, and we always encourage your questions. Please use your questions chat option on the right side of your screen to submit all questions. And with that said, Paul, I will let you get started.
Thank you so much, Lindsay. Good afternoon or good morning to everybody. Thanks to Family Office Networks for this opportunity to have a conversation and engage with such a prestigious audience. I know that we have folks from different time zones, and I thank you for dialing in. From an asset allocation perspective, art is under-owned versus other asset classes. Under-owned by ultra net worth individuals, let alone by institutions. This is surprising and an opportunity at the same time, given its superior risk-adjusted return, and given that art is a scarce asset with forceful demand due to changing global demographics and tastes. The LATAM Art Fund, based in Delaware, is looking to acquire high quality value and momentum assets from the LATAM art market. Unlike other art funds, the LATAM Art Fund fuses undervalued art assets with digital opportunity. The fund offers investors a low volatility, low correlated, inflation hedged, high risk adjusted return from an alternative asset, which provides portfolio diversification. I mentioned the inflation hedge. I think it's very important today. Looking at the numbers coming out of the US, I see a lot of pressure coming from inputs, inflation, from commodity prices. In addition, it is an alternative asset. And I think it was interesting that the chief strategist of Bank of America recently named real assets as his preferred option moving forward, in terms of a balanced portfolio, of course, a balanced allocation. In the fund, we focus on established liquid artists with a proven auction history and a low coefficient of variation, plus active emerging painters too, with a tangible auction history. Our team of experts is targeting identified artists, particularly over the 1930s to the late 20th century. We focus on Uruguay and selected Latin American countries, including Mexico, Brazil, Colombia, Chile, and Cuba. We will also look to partner with blue chip partners in innovation related to the art market. In terms of risk management, no single asset will be more than 5% of the fund. The average price will be around $200,000. We have identified a sweet spot in the market between 1 and 10 million US dollars for liquid and emerging artists, where the coefficient of variation is the lowest. We stress that we see Latin American artists as fundamentally undervalued versus more famous, liquid, and developed names. In terms of risks, risks involve those associated to the art world or the world in general. There are risks connected to buying or selling a piece of art, and risks linked to the specific asset itself. When I mention 200,000 US dollars as an average number, I mean this fits in with the average achieved lot value of Latin American art in the first quarter actually this was in 2020. In 2021, it was pretty much around that number as well. There are 2 auction houses there. Who are we? Our board of directors it's an expert board of directors based on blue chip and investment fund management acumen. The board of directors consists of Dean Newman, renowned former head of emerging markets at Invesco Perpetual, a Latin American investment expert, and an experienced pension fund board member. Dean is currently also a fintech, at this point in time, a fintech investor. Andres Bernal is the former CFO at Grupo Sura, one of Latin America's biggest multinationals. He is an investor in and builder of quality Latin American enterprises. Andres is currently the CEO of Grupo Orbis, the Sherwin-Williams of South America. Then there is myself, former head of research and head of corporate finance at Banco do Brasil Securities London, CEO of Creative Portfolios Limited, and the founder of the LATAM Art Fund. The board is a pillar of the LATAM Art Fund's ESG commitment, especially in governance and stewardship of assets, and brings to the table a wealth of experience from global fund management and investment, from the Latin American business community, and from investment banking and markets. The advisory committee is a font of art wisdom. So where a lot of the board of directors have an investment focus, they're not totally that, but they are extremely good at governance and investment asset management. The advisory committee is very much centered on art expertise and connections in the art world. We are very lucky to have Dawn Addis, CBE. Dawn is a world-renowned art historian who's published on diverse subjects such as Dada, Surrealism, women artists, and Latin American art. Karen Grimson is a former MoMA curatorial team member for Latin America and a prominent art historian. Karen has particular experience of having worked on the curatorial team in New York on the Torres Garcia exhibition a few years back. Fabio Freire Lima and Christos Ioannidis are two other members of the High Quality Advisory Committee. Fabio is on the ground in Brazil, and you know, he will be very important as a source of information. And Christos is a copyright and intellectual property expert. The pandemic has forced art galleries, dealers, and auction houses into survival mode, and it's also forced them into new exciting areas where maybe we've jumped a generation in the space of a year. Online activity has partially offset some of the lost market from art fairs and galleries. Citibank indicates that 68 trillion US dollars of wealth will flow from baby boomers to Gen X and millennials. Social impact philanthropic activity is on the rise. The emerging world is generating wealth for potential buyers of art, including in the Asian market. Credit Suisse estimates that in 2020, there was a 40% jump in new buyers of art. In times of rapid technological and generational change, high quality art will have an enduring value, attracting both old school and new players onto the scene. The internet and digitalization are transforming the estimated 1.7 trillion US dollar art market into an online marketplace. Artificial intelligence is opening up digital opportunities. Blockchain offers a path towards secured transactions, access to provenance, and title of registry. Christie's, as you will all know, recently launched non-fungible tokens, an encrypted file run on Ethereum, used to represent a unique asset and valued as collector's items, run on Ethereum blockchain. At the LATAM Art Fund, we will actively pursue technological opportunity, whether it be in provenance or virtual galleries, for example, if it is in the interests of our investors and we partner with blue chip investors. Since the 1930s, many US galleries have exhibited works by Latin American artists, such as Frida Kahlo, Rufino Tamayo, Roberto Matta, and René Portocarrero. There have been regular international auctions dedicated to Latin American art since 1979, with the two big auction houses dominating the market. Latin American art is an established and liquid market. Art has existed for a very long, the art market has existed for a very long time, over 5 centuries. And Sotheby's is, I think, if not the oldest, but one of the oldest companies listed on the New York Stock Exchange. Art is a scarce asset, while forceful demand comes from high net worth individuals. Art is not correlated to the S&P with a correlation factor at 0.11 over 40 years. Deloitte estimates that the total value of the art market to be $1.7 trillion. Now, that's really not a huge figure at all, because when you really put digitalization and digitize trends and you extrapolate into the future, this is a market that could be 5 to 10 times bigger. In 2019, global sales of art and antiques were estimated at $64 billion US. Only 1% of all auction paintings over the period from 1970 to 2013 fetched prices higher than $1 million. The art market is similar in size as it's calculated today to private real assets, but half the size of private equity and even smaller versus gold or public equities. High net worth individuals hold just 5% of their assets in art, while institutions have little or no exposure. This represents a huge opportunity. Contemporary art has shown a 13.6% annualized return since 1995 versus 8.9% annualized return for the S&P 500. Looking at a 25-year annualized performance, we see that art has low correlation, added diversification benefits, lower portfolio volatility. Not included in this slide is the fact, is the point that I started off with about art being actually a very good inflation hedge as well. For works priced between 1 and 10 million US dollars, the coefficient variation is 2.5, and it's 2.4 for works priced less than 50,000 US dollars. The coefficient of variation is the ratio of standard deviation to the mean. The lower the number, the lower risk you're taking on, which is why we will be concentrating. I mean, it might be averaging out at 250,000, but we really will be concentrating on the 1 to 10 million area and the under 50,000 area. But I'm sure that there will be opportunities in the 250,000 to 1 million, because there's quite a cluster of interesting artists that are priced in that range at the moment. The coefficient of variation for liquid assets is 1.9, and for active artists 2. And you can see there, the further you go up the risk scale in terms of the coefficient of variation, this is because of inactivity and illiquidity. We just do not want to take that risk. I thought this was interesting. In 1974, the British Rail Pension Fund invested in more than 2,500 works of art over 6 years. The fund delivered a compound average return of 11.3% per annum from 1974 to 1999. This is an interesting graphic. It shows from 2003 to 2017 the price indices of the five, I would call them the five superstars, Botero, Lam, Mata, Rivera, and Tamayo. I think it's interesting because if you would have bought the dip with Lam in 2017, you would have done extremely well. And if you would have followed the momentum of Botero, you would have been richly rewarded. LATAM artists in particular, women are underrepresented in the major museums and galleries of the USA, Europe and Asia. This is predicted to change with demographic and diversity shifts. Considering Latin American art has a global collector base, it is surprising that so few works of art have sold for more than $1 million. It would be definitely under 200. Over the last 2 decades, going back to the former slide, the prices of many top Latin American names, the big five we talked about, really sort of flatlined or dipped, with the exception of Botero. And with Botero, what we here see that he has achieved prices in excess of the estimates, and he continues to be a very strong player. With Wilfredo Lam, if one had bought the dips or been buying Lam over the last decade, one would have been richly rewarded, a truly monumental artist. And on the 29th of June 2020, he achieved with one of his paintings, Orni Orbini, a price tag of 9.6 million, which was higher than the lower end of the estimate, which was 8 million. This is Wilfredo Lam again. This was actually back in June 2019, 169% above mid estimates. Rufino Tamayo, pretty steady, again one of the top 5, achieving prices in relatively recent years, well within the estimates at auction. In January 2021, he did slightly better than that. He achieved a price for this wonderful piece 154% above mid estimates. This is the great Joaquin Torres Garcia. This went for 2 million. I wonder if one day it'll go for 5. Joaquin Torres Garcia, we can see some returns here. There's a return there of 15 times over 23 years, top left. Bottom left, 4 times over 17 years. In the middle, 2.33 times over 6 years. And on the right, some smaller pieces of work, but over 6 times over 3 years. Julio Alpuy from the Torres Garcia workshop. We can see a total return there of 4.2 over 2 years. And on the right, 3 times over 10 years. The workshop of Torres Garcia has very mixed results. They're really very volatile. I was watching an auction of Gonzalo Fonseca about a month ago, and the reserve price was only $11,000, which I thought was a joke. And it was, I mean, at the auction, it looked like it was going to go for 9.5, and then in the last 2 minutes it made the reserve price. But it's something we'll be keeping an eye out on the Taller Torres Garcia. We have seen some big movements in specific artists like Gervich, and you can buy a really brilliant piece of Gervich for about 80 grand, $80,000. And there's been a certain amount of momentum there, but who's to say that that is a high price at all? I mentioned women artists earlier, and I do think that there is huge opportunity, and this is beginning to play out, particularly with the great Remedios Varo on painting 4 and on painting 6. And, you know, linked into the work of Leonora Carrington, which is the third picture there. And I believe that there is, you know, huge opportunity here in this space. I mean, as an example, we have some examples of female artists. In the middle, we have Marisol, a total return of 4 times in only 3 years. Leonora Carrington on the right, over 8 times, over 19 years. And Sarah Grillo, a very much up and coming artist, well, in terms of the market, a very underrated artist like Freire from Uruguay. Here, you know, we've got a return of 16 times in 20 years, and Tilsa from Peru down at the bottom, 5 times in 14 years. I'm going to talk a little bit about Uruguay. I think this is, we've talked about opportunities in female artists, momentum artists, value artists, and I was actually going to talk about who the next big 5 could be. We've talked about the 5 rock stars, if you like, in the market. There are a number of candidates who could well migrate higher. I like to sort of see the top 5 as almost like the FANGs, the Apples and Alphabets of the world. I think they will continue to be in high demand. But what we'll be also looking out for is who the next CrowdStrike is going to be. And that could be Jesus Rafael Soto, Carmen Herrera, Olga de Amaral, Beatriz Milhez, or Carlos Cruz Diaz will be a candidate. But I'm going to talk about Uruguay. Why have I moved suddenly on to Uruguay? While we will be looking across LATAM for opportunity in places like Colombia, Peru, the LATAM Art Fund will be paying special attention to Uruguay, a market with potential and low risk within Latin America. Uruguay has a Fitch ESG relevance score of 5 for political stability and rights, and for the rule of law, institutional and regulatory quality, and control of corruption. Uruguay is in the 81st percentile for the World Bank governance rankings. So it's, you know, pretty much in the same mold as Chile. Uruguay's debt management of the pandemic has underscored its inherent structural strengths versus peers in Latin America and globally. The tragedy of the last year has been particularly painful in Brazil, you know, as we know, and initially certainly in Peru, and well, control on real primary spending, adoption of a structural balance, and a cap on annual net borrowing reveal a common sense fiscal strategy. So it's a sensible low risk jurisdiction like Chile. Once you have the talent in one place, a lot of good things start to happen. Rather like Israel, Uruguay has a thriving tech scene and a small population. Technology is viewed by the government as a strategic asset. In the 1960s, Uruguay became the first country in the region by a long way to introduce computer science degrees just 2 years after MIT. In 2007, it was also the first country in the world to implement a one laptop per child program in public schools. I wish we had had that in the UK. We can see from this slide that there are a number of unicorns, a number of tech startups involved in COVID apps, restaurant management, digital banking. It's a very exciting place to do business. With a population of only 3.4 million, the Uruguayan art market has punched above its weight in the last few decades, being well represented at the Venice Biennale and the Sao Paulo Biennale, while cultivating over the decades closer connections to the US. Uruguayan art has a distinct brand with notable artistic phases and heritage, commanding internationally a strong, reputable liquid auction history with a high sale-through rate. Uruguayan art has notable artistic periods and heritage. The 1930s and the 1940s were a golden age with Joaquin Torres Garcia and his workshop, which I mentioned previously. Uruguayan art has commanded an internationally strong, reputable liquid auction history with a high sale rate. Deloitte estimates the total value of the art market to be 1.7 trillion. As we've mentioned before, this number really could be it could be a massive underestimation when you extrapolate the digitization trends, and there's a real tailwind behind the generational shifts going on at auction houses, for example. In 2019, global sales of art and antiques were estimated at 64.1 billion. Sales in 2019 through dealers and galleries were estimated at 36.8 billion versus 24.2 billion at auction houses. The internet and digitalization are transforming the art market. AI, blockchain offers a path towards secured transactions, as well as transparency around giving. Art is under-owned versus other asset classes. This is somewhat surprising and an opportunity, given that art is a scarce asset with forceful demand stemming from global demographics and tastes. While LATAM artists represent a broad and established market, they are generally undervalued, especially women artists. At the LATAM Art Fund, we target specific momentum and value LATAM artists who exhibit liquid and active auction characteristics and command a low coefficient of variation. We focus on the relatively stable Uruguayan art market, which commands a rich cultural heritage and an emerging brand, as well as diversification opportunities elsewhere in LATAM, including Brazil, Chile, Peru, Mexico, Cuba, and Colombia. This is a graphic of the art business process. We will be looking to purchase pieces of art from private collections, from auction houses, and in some cases we will be going to the source itself, whether it be Montevideo or Sao Paulo or Medellin, and the art will be stored in Delaware at Bayshore. They're high quality professional storage facilities. Based in Delaware, the Latin American Art Fund, the LATAM Art Fund, offers investors a low volatility, low correlated, inflation hedged, high risk adjusted return from an alternative asset which provides portfolio diversification characteristics. We target high quality value and momentum assets from the Latin American art market with a low coefficient of variation. We want to capture the upside in the combination of undervalued art assets with digital opportunity without following slavishly fads, getting tripped up by making risky investments, decisions. The LATAM Art Fund will put 15% of its performance fee to supporting Latin American art scholars to study in the US and UK, and for art scholars to travel and study in Latin America, in Montevideo, for example, through our foundation program. In that way, we will be making a modest contribution to something greater than ourselves, to wider society. I thank you for your attention, and please, I'm open to whatever questions you might have.
Thank you so very much, Paul. Yes, let's open it up to Q&A. Again, to our attendees, we have the questions chat option on the right side of your screen to submit those questions on over. Paul, I'm just going to jump right into it here. Chris has a lengthy question, so I'm going to do my best to read it off here. As the market continues to try to figure out when the next downturn may occur, what are your thoughts on how such downturns impact the investment in the art market?
It's a very good question. Remember, I think the key point about low correlation, we have seen periods where the art market has fallen as the equity market has turned sometimes very violently lower. The art market tends to fall less, if that's any consolation, but not the whole time. It can, in other downturns, it can hold up extremely well. It does tend to be pretty resilient. It does fall less than the more volatile equity market. I mean, I'm probably better off talking about equities than the bond market. The bond market has had quite a hammering of late, and it's a bit of a battle going on between the bond vigilantes and the Fed, and I'd rather be on the sidelines with this. I wouldn't be a big buyer of bonds at the moment, but I think with equity markets, as in the art market, it's really a similar mindset, a similar approach, is that you've got to be very selective. You buy your alphabets and you look for your crowd strikes, if that analogy can help. But I don't have any illusions that if there is a big bout of volatility that will affect everything. But if it is some consolation, art does tend to have a low correlation, and as a result, a low correlation to other assets, can be a better performer than something like gold or crypto, which is in a very early phase, I think.
Okay, great. Thanks, Paul. Next question here from Max. He says he's an art collector and he would like to know why you're focusing on Latin American art.
Thank you for the question, Max. It's really a passion, really. My two passions are investment and art. And a third passion, in my career has always been Latin America, different parts of the region. So I'm really excited that I'm fusing, if you like, my passion for investment with my passion for art, and my expertise is mainly in Latin American art, and that's kind of it, really.
Passion is a good thing, I think, so that's fantastic. Okay, Paul, next questions. I'm going to lump a couple of them together because it's somewhat the same, from Erdem and Christina. Can we talk a little bit more about the fund and what the minimum investment amount is, the terms, length of time, fees, etc.?
Yeah, I mean, all this will be in the PPM, which is a very detailed document. But we're looking for a 10-year fund. The management fee is 1.5%, and the performance fee is 20% above the hurdle rate, which is around about 10%. And the key with the performance fee is that part of the performance fee will go to the foundation, 15%, and in addition, there is no performance fee until investors get their capital back and the 9 to 10% return. The fund is based in Delaware, which is where the art is going to be stored. It has high levels of corporate governance built into it, and those are, I think, some main points. But it's there. All the issues are covered in the PPM.
Okay, perfect. Yeah, we can send over some more detailed information following the webinar. Let's see. Next question from Olga. How is this correlated to the real estate market, commercial or residential? What with what market is the high correlation? I'm not sure.
The commercial real estate and real estate, I mean, I'm not an expert in that field, but I would suspect, I would have to get back to you, Olga, on this. I could do some research for you, but I think art I believe art is, you know, has a lower correlation.
Okay, sounds.
Yeah.
Yeah.
Yeah, but the point is, if you have a big portfolio of commercial real estate, you really do want an allocation to other assets. You want to be nicely diversified, and art can give you, along with other alternative real assets, that diversification. It's a question of not putting too many eggs in one basket and just getting the asset allocation balanced. And at the moment, institutions are way off, and high net worth individuals could go higher by some in art and digital art.
Okay, perfect. Thanks, Paul. Next question. How many artists are you following and how many of them are women?
I would say, I mean, we are following a lot. I mean, I would say 500 to 1,000 are on our radar across Latin America, and I would say 50% of them are women, easily.
Perfect. Now, can you elaborate on why you think art is a good investment?
Yeah, art is a good investment because it's an inflation hedge. It provides a high risk-adjusted return. It has low volatility, which goes back to the earlier question. It provides a hedge against inflation. Art is a growth market, I believe, because of art itself and the demographic changes, but that is compounded by technological shifts going on with blockchain, with AI, and you know, as I say, we've jumped a generation in the last year in art, and art is going to be a much bigger market than 1.7 trillion. It's, you know, it's going to double, triple, and then, you know, and some. So you know, who would have thought that art would be at the forefront of now of so many transformational changes going on? I mean, the art sector has woken up in this pandemic, and you know, all, you know, cylinders are on, and you know, it's off to the races, really. There's huge growth opportunity, but one always has to temper that with risk management controls and be prudent and not get carried away with things, you know. But let's say we're cautiously optimistic.
Sounds good. Let's see, Paul. How will you be fusing physical art with digital opportunity?
Yeah, that's a very good question. It's what we will be doing is we will be buying physical art, and we will be buying art-related assets which have a digital sort of label, if you like, things like provenance apps and online virtual galleries. We have a very good deal flow for art-related digital opportunity through one of our board of directors, who's a fintech investor. You know, a chain reaction, and there's an investment bank that has a really good deal flow, which we would look at very carefully, but very mindful of opportunity. And if, of course, that's the proviso, the condition, we partner with people like Bloomberg or Tencent, for example, these types of companies. I mean, there are lots of them, but if there was a blue chip partnership, we would consider it. And also, this is a key point I'm sure lots of families, lots of investors will be thinking of, is market liquidity. We are looking very, very closely at the potential to use a digital platform or venue to create market liquidity for our art assets.
Okay, Paul, let's talk about risks a little bit. What risk controls and risk mitigation measures do you take?
Yeah, I mean, the risks, I did outline some risks earlier on in the presentation, and there are risks to the specific asset. You have to make sure that the provenance is robust, that there is a COA, that one can track the background of the asset with certainty. So we have specialists to help us in that field. One of our advisory committee is a specialist in this area. We would be using Pall Mall in terms of help with third-party valuation, and a risk was pointed out by one of the investors earlier on today about what happens if there's a really bad downturn in global markets. I suppose there is a generalized risk for the world in general. If there is a some black swan event. I mean, nobody saw the pandemic coming. These are risks, but I would say the art market has performed with great resilience during the pandemic. It's been a hard process, but during the pandemic, we've actually seen more new buyers of art than ever before. But yes, risk management is very important to our board of directors that have huge experience in risk management. We wouldn't put all of our apples we would not allocate an excessive amount to one specific asset, whether it was a piece of art or a digital art venture. There are risk controls, parameters in terms of our own diversification and allocation. So we wouldn't purchase an asset for more than $2.5 million, and unless that was signed off. Those are our parameters. Unless it was signed off, it was a very exceptional circumstances, and our investors were informed, and of course our board of directors would take a decision on that. So that there is no chance at all with my board of directors of any kind of gung-ho attitude. We're all actually very really rather sort of temperate people. But yes, I think risks are sort of the asset itself, the world in general, and the art market. If there was some event that took place in the art market which was disruptive, one can't rule that out. But there are, I mean, in life, when you take a decision, you have to just look at the probabilities. You know, you computate and you make a decision, yes or no. Yeah.
Great, Paul. Thank you so much. We are running here out of time, and I do want to be mindful of that for everyone. We thank you all for joining us today. My name is Lindsay from Family Office Networks. I will be following up with everyone individually. So if there's any additional questions or you would like to get in direct contact with Paul, I would love to make the introduction. We hope you have a great day, and thank you so much. Bye, Paul.
Thank you. Thank you so much for your time, everybody.